I think the base of a successful wealth management firm is strategy, culture and communications, and it's something probably that today's politicians, particularly those in government, lack.
Welcome, ladies and gentlemen, from me, Yuri Bender, to this early March edition of the PWM Tea Break video series with my guest today, Julian Samways. Julian is founder of the JPES Communications Consultancy and a strategic advisor to many leading wealth and asset managers. And what kind of tea are you drinking today?
Builder's tea, which is my favourite tea.
John Major was a big fan of the English breakfast tea with his wife Norma, and you've been writing for us, Julian, about the lessons we can learn from politicians.
I think the base of a successful wealth management firm is strategy, culture and communications, and it's something probably that today's politicians, particularly those in government, lack. Strategy is having a strategy in relation to markets, in relation to regulation, in relation to product innovation, in relation to client service, and often strategy can be blown off course by events. And if you've got a strategy, it gives you a path to get back onto when that has happened. So you've got a clear sense of direction of where you're trying to get. And then culture is equally important. The culture of your people, how that leads to improved investment decision making, that's really important. And then thirdly, communications. If you've got the right strategy and you've got a good culture which brings the best out of your employees for the benefit of your clients, but you don't communicate it, well then sort of what's the point? So those three things are equally important in investment management, wealth management, as they are in politics.
And of course, strategy and culture are very interesting because for many years you were head of media relations at Schroders, just round the corner from here at Gresham Street. And I remember one commentator saying to me, that place, there's more machinations than the Borgias in there, in Renaissance era Italy. And now, of course, Schroders, it's being bought by Nuveen, the American fund manager, to create a massive 2.5 trillion transatlantic funds house.
Nuveen are owned by TIAA. They are long-term investors in their investment business, and therefore they'll probably make a good match for Schroders. I think the one thing I would say about the Nuveen Schroders merger is you've got to be able to make sure that you've brought your clients on board in all the implications of that merger. But the other thing Nuveen has said is that they're going to keep the Schroder brand name for at least 5 years, and they're going to make London their overseas headquarters. And I would say they better stick to that, because if they stick to that, that's more likely to make the merger work.
And there are many other operational challenges ahead for wealth and asset management firms. And we were speaking to Chris Fisher at Moultries, and he was talking about COVID, and a lot of us forget about COVID, and he was saying what a major turning point that was in the way that firms communicate with their clients.
Interestingly, my firm does a lot of asset owner research, and there used to be dissatisfaction with the way asset managers used to communicate with their clients, in the sense it was a bit too vanilla, not tailored enough. The period of COVID really raised the game in terms of communications, in the way that fund managers explain their investment philosophy, their investment process, what was happening within portfolios. So we've seen a big jump in the quality of communications with clients since the COVID era.
And as you mentioned, Julian, this explaining product strategies, it's absolutely key. And I remember having a conversation with you, it must have been 25 years ago.
Really?
It was at the time of Paul Miner's, his investment review, and he was recommending that private equity should be at the centre of portfolios to try and revive the British economy here.
So it's about education, it's about clear communication, it's about transparency, it's making sure that where your USPs are if you're offering these products, making sure that there's no conflicts of interest in the deals which happen within private markets funds. All those are really important, and the scrutiny that people are going to be under to offer these products should make sure that eventually investors understand the risk profile of them and understand what they can bring to their portfolio. That's happened in the institutional world, and I think it's now happening within wealth management.
Let's picture, Julian, an advisor who really does understand these markets. So a lawyer or a banker who not only understands these new developments, but also the traditional stocks and shares, is able to give advice on those, has a calmness, a strategy, a wiliness, an ability to get on with different generations. And one example would be Tom Hagen, who was the famous consigliere to the Corleone family in the Godfather films. And sadly, the actor who played him, legendary Hollywood character actor Robert Duvall, left us a few days ago, aged 95. For many people that I speak to in the family office world, they say Hagen was the quintessential family office advisor.
Right, well, I don't know what it says about my business, but Godfather films are my favourite films, so I know the character very well. Investment management, wealth management is still a people business, and AI is never going to replace, not in the foreseeable future, the people element. Investment is all about trust, looking at people in their eyes and understanding I give my money to them and know it's in safe hands. Our own proprietary research showed is that investors, particularly in the wealth management space, couldn't wait to get back to face-to-face meetings. So yes, AI brings many advantages, but it's still the people-to-people contact that matters, and particularly in wealth management.
And I'm sure you won't be replaced by an AI agent anytime soon. I look forward to many further conversations. Thank you so much for joining us at the FT today.
Well, thank you for having me.
And I look forward to seeing you all next week when we will be discussing wealth management business models, which combinations and which brews work for clients and which should be poured down the kitchen sink in our next episode of the PWM Tea Break.